Good morning, traders. It is Monday, December 15th, 2014, 8:01 a.m. Chicago time. Thanks for joining as always. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Looking at the news overnight, not much there, very light. Fitch cuts France sovereign rating from AA plus to AA. Just one notch. The U.S. Senate passes the $1.1 trillion spending bill, preventing the government from shutting down. The deadline was Saturday. It did not look good going into Friday afternoon. I believe the strong sell-off on Friday afternoon was a result of this. And then this morning, December Empire Manufacturing, negative 3.6 versus 12 estimated, positive 12 estimated. This is the first negative reading since January 2013 for the U.S. Empire Manufacturing. Looking ahead, in about 13 minutes, we're going to get November industrial production, expecting 0.7 versus last month's negative 0.1%. Capacity utilization at 79.4 is the estimate, and manufacturing production at 0.7. At 9 o'clock Central, that's a half hour after the cash open, we have U.S. NAHB Housing Market Index expected at 59. At 10:30, we have the usual weekly 3-month, 6-month bills for 50 billion. That's 50 billion. And then at 3 Central, right at the cash close, we have the net long-term tick flows. There's no estimate. Last month it was 164.3 billion. And then this evening at 7:45 Central, 8:45 p.m. Eastern, China HSBC December preliminary manufacturing PMI. While we're here, and because the news is light, I wanted to make sure we go over what was expected for the week. Busy week ahead. Today there really isn't much, as I'd already covered. But tomorrow we have European manufacturing PMI as well as services PMI. That's at 3 a.m. Central. We have UK CPI, UK RPI. We have the German ZEW survey. Pretty important if you're looking at the Bund, Euro stocks, Babel, and DAX. And then tomorrow morning we have housing permits at 7:30, building permits, and then manufacturing PMI. U.S. manufacturing PMI at 8:45 Central. That's tomorrow. And then on several auctions, I won't cover those. And then Wednesday, we have the minutes from the Bank of England at 3:30 Central. We have the UK ILO unemployment rate at 3:30 Central as well. Eurozone CPI, very important to watch there for the ECB. US CPI at 7:30 Central. We have the 9:30 crude oil inventories number. Again, this is Wednesday. And then we have the FOMC rate decision at 1 Central. So Wednesday's pretty busy. Several CPI numbers in addition to the Fed rate decision. So tomorrow might get fairly choppy as we recover from the sell-off on Friday. And then looking at Thursday, German IFO business climate at 3 a.m. Central, retail sales in the UK at 3:30, and then we have initial claims in the US, services PMI, Philly Fed at 9 Central, US, and then we have Netty Gas, and then we have Draghi speaking at the European Council meeting in Brussels at 10 Central on Thursday. And then finally, Friday, looks like PPI in Germany at 1 a.m. And very, very quiet Friday, incredibly quiet, not much out there. And 2 speakers, Fed's Evans at 9 a.m. on Friday, Central, of course. 11:30 Central, we have Fed's Lacker on Friday. and that's really how the week is shaping up. So pay attention to tomorrow, to Wednesday's FOMC meeting, and the CPI numbers, also the European numbers, if you trade those markets. Let's look at the technical picture and look at context here. Context is key to trading. No matter what you use, context is helps put you in a strong position. On Friday, we got the responsive buying as expected from that morning's Trader Bite. We got responsive buying. Really could not stay into the Thursday range. Found sellers. Sellers came in, took out the mid. And you could see here, lots of action on Friday. So the Renko chart's very, very busy. I've had to switch between 4 and 2. So right here, we push into Friday's range. This green line right there is the prior day's low. We stopped just ahead of it by a tick, pull back to VWAP, couldn't quite get to mid, and then we make another push at it. Friday's open looks like an OTD or potentially an OAOR, but more like an OTD. And so there's a driving force in here. And then the sellers step in, take it below Friday's, below the Thursday low, and then linger right above the mid. And once it breaks mid, the expectation is for the open to be tested and the lows to be taken out. So here we have a break of the mid, a retest, the open, and then new lows. And then from there, it was just downhill. Tough trade in here on Friday. In this section here, lots of flipping and flopping. It just seemed like it got done. It had completed its tests below. If you recall, my target on Friday was 2005 and a quarter. 2005 and a quarter is what I mentioned in the Trader Bite, and then early on it got to 2004.75, pushed it by 2 ticks, stopped ahead of it by 2 ticks earlier, but then pushed through by 2 ticks, and then consolidated, and then found buyers back to the mid. This worked out beautifully, but then immediately afterwards, this was very confusing here. A big M formation that broke down, and then the market sold off to the low. Okay, so very impulsive move there on Friday. If we look at this, the market basically closed right at the extreme, very thin profile. You could see that the overnight session basically took all of that back. The overnight session pushed right into the middle of the gap. There's a gap from October 30th and October 31st. Let's go back and have a look at that. There's a small gap here, the low of 88.25, the high of 87.25, so it's just a 1-point gap, and the mid of that gap is 87.75, which is the overnight low. So it went and filled the mid of that small gap, found buyers, and it came back up. Pretty decent trading overnight, actually. If you look at this chart, pretty good structure. Market showing fairly good strength from the buyers coming in. Quick test on the open, and then just walked itself back up through this LVN zone, this thin zone. Let me turn down my news feed. Very loud. Went right through the thin zone here, and it has not touched the point of control yet. The expectation is that this is likely to continue higher. Again, the close is beneath us, but the point of control is above us. Note that even though the point of control shifted down, overall, it stayed pretty high up on the profile with a very thin leg below. So if we look at this in the market profile sense, which is time-based rather than volume-based, you could see that there's this is all single prints into the close. So very impulsive move down, leaving us with the high potential of that low being tested again. We will have an open gap below us, but overall, the market seems to be wanting to go up. When we look at the big picture of what we've done, we've fallen off the highs again. The March high is 2072. The difference between the December and March contract is 7 points. March high of 2072, and then we fell off that balance, and we've traded pretty well through this profile from the prior balance, which was the 31st through the 20th, and we've gone to the other extreme of this balance zone right here, and now we're bouncing back up. This looks to me like a corrective bounce or just a retracement, and it doesn't look like buyers are really stepping in. We'll see what happens today. Of course, we have the Fed, so we have to see what happens here. But overall, this has thoroughly tested this last profile and did so on pretty good volume. When we look at the weekly, let's see, where are you? Here we go. When we look at the weekly profiles, this is last week. This was the week before. You could see that last week definitely had pretty good range, strong, solid volume, and we've got some interesting levels up above us. I have 19.25 as a key level. Next one up is 35, 36 as areas to test, based on just last week's profile. But the profile going back to this zone, actually we need to push this balance back. The profile for this zone carries this 29 as a key area of resistance above. So you might want to note that down, 29, and then the targets below are 79.50, and the 70.50 to 68.50 area are also fairly key. So if we pull this up, we have this 29 zone. You can see this HVN again brings us into this MCV POC. I expect a decent amount of resistance in this area, and then the targets below would be 79.50 right here, 79.50, and then 68.50 to 70.50 as pretty decent areas down here. 68.50 is the MCV POC of these 3 days of balance before the gap. So if it continues, I expect an extension lower on this. There's a bit of room left for the swing. So let's look at that. Just looking at those, monitoring the fibbers out there. A little bit of room left to get to 38% on this sell-off. 50% is at 1939. I do believe that we're likely to push higher today, but I expect sellers to step back in today and push this slightly lower. Cap utilization is coming out with industrial production right now. So that's basically the overview of today and looking at this week. Again, the expectation is for the overnight high to be vulnerable up to and through 2010-25, and it might push as far as the open on Friday. I expect sellers to come in and start pushing back through this LVN zone and start walking down this flagpole that was left behind on Friday. This auction abruptly ended. And it ended because the day came to an end, and it seemed like the longs did not want to hold through the weekend. So time stop this auction from finding its buyers. And I believe it's incomplete. I could be wrong, but I believe it's incomplete. I believe that it's likely to test lower to make sure that there isn't any stronger buying interest at lower prices, and to fill in this gap zone that we've left behind, leaving us with pretty decent targets. Again, 81.75 is a naked point of control, but looking at 79.50, 68.50 to 70.50, this area here and this area here for potential test areas. I would exercise caution this morning. Again, news flow is pretty light. There's not that much coming out. NAHB a half hour into the open, so the market will be running under its own power, and we'll see how it auctions. But overall, pretty strong overnight trade on the buy side with pretty good volume. So here we have 233,000 contracts traded overnight. And you can see here it's starting to make its way back up. I believe the overnight high is vulnerable. So once that happens and it pushes through to 2010.50, again, it could push right through to the open on Friday. Gives us a little bit of a notch out here. We have a small LVN at 2014, and then I expect that sellers will step in and start to press and continue their work from Friday. We'll see. If I'm wrong, that means the this bottom is here for a bit, and then we'll have to change the bias and go the other way. Good luck today, and I'll catch you tomorrow morning. Take care.